Hey guys, it's Carter. Welcome back to the team. Hope you guys are all having a great and amazing day today. Now in today's video, we are going to be diving in and we are going to be talking about the one, the only Tesla. We're going to be talking about is now the best time to invest in it. We're going to be looking at everything you must know about it. So I hope you guys all enjoy it. If you guys get anything in value out of this video, hit that like button and subscribe. If you guys are new to the channel, we talk about everything money, stocks, money management, trading, investing. So subscribe, join the team, and if you guys want to learn more about swing trading, we just released a brand new swing trading course where we talk about strategies, how I find stocks, the best approach, certain brokers to use. It's a one-stop shop for all of your swing trading needs. I'll put it down below. We're doing a Black Friday sale, so check it out. But guys, let's dive into this. Now, for those of you that don't know what's been going on with Tesla, well, guys, in general, in the past month alone, Tesla has pretty much had rapid growth. It's gone up about 19% in a single month. So obviously something's going on inside the company. And guys, we've seen a ton of volatility, right? Looking at this chart, you guys will see that, about a year ago, this thing was trading for as low as we zoom out here. This thing was trading for as low as $100. And within 1, 2, 3, 4, 5, 6, 7, 8 months, we've seen this thing hit highs at about $300 a share. So obviously, what's going on? What's going on with Tesla? Well, for those of you that don't know, one of the main reasons why we've seen so much growth out of Tesla and a variety of other companies is actually because of artificial intelligence. Right now, Tesla is investing so much money into AI and data and software. But on their last earnings approach, you guys will see Tesla got absolutely annihilated. The stock went from about 250 all the way down to about 194 in the matter of about 5 days or so. So this thing got crushed. Now, one thing by looking at this stock, you guys will see that it did have some old resistance here just on the technical side that is now offering new support for Tesla. It soon rebounded, and this is why we've seen a lot of growth this past month, is because it had such a rapid sell-off from 250 all the way down to 194. Now, why did it get so much sell-off? Well, Carter, they released an earnings report. Now, the earnings report that they released was not very good. They actually missed their revenue. They missed a variety of things, right? Looking here, you guys will see the vehicle deliveries they missed. Now, the net profit margin is down about 48%. The gross margin is down 28%. The earnings per share is down 44%. The revenue has fallen. As we look at this, yes, we've seen operating income down 52%. The net income is down 43%. So you're asking this question of why we got sell-off. Well, it's because of their fundamentals. The company right now has been cutting a lot of their vehicle prices. And what does that cause? That causes the profit margin to fall. And the reason why is because all they're doing is cutting their profit margin to get more vehicle sales. So that's why we're seeing so much volatility among Tesla, and a lot of its cash flow statements, a lot of earnings reports is because of them cutting that. Now, the reason why they're doing this is Elon Musk himself pretty much said one of the main causes of this is because interest rates are so high. Now, when you have high interest rates, this causes a car payment, obviously, to go up because most people finance a car in the United States. And when you have higher interest rates, you'll have higher monthly payments, which will cause people not to buy cars. So Tesla's kind of taking a different approach, trying to cut those prices. So that's why we're getting a lot of sell-off. Now, to answer that question of should you invest into Tesla? Well, Tesla is obviously, it's a growth stock. So it's not like investing into like the S&P 500 or like the Dow Jones or the NASDAQ. This thing's growth. And what I mean by that is it's going to fluctuate, right? As we zoom out, you guys will see that Tesla is very, very, very volatile. And what I mean by that is, yes, we've seen a ton of growth where this thing has gone from $17 to 414, but then look, just as fast as this thing went up to 414, it sold off all the way down to about $100, and then it went from 100 all the way down to 280, 284. Then it sold off back down to 192, back up to 236. So there's a lot of volatility, but what you can do and what you can use to your advantage is a lot of studies and a lot of indicators. So one of the studies and indicators I love is something called the 200-day moving average line. This line, in my opinion, represents a very, very hard support and resistance for Tesla. When the stock is above it, it acts as a very hard support, right? As we zoom in, you guys will see it hits this red line, quite often, and every time it hits it, we just see a lot of tendencies of getting a lot of buying pressure around it. Now, when the stock falls below it, we do see tendencies of it using it as resistance. So we got a little bit of some sell-off there, student rebounded, and then hit it again as resistance, and then recently it broke out, hit it as support, and then recently we're now seeing a breakout from it. So right now it's starting to use that 200-day moving average line again as support, which could be a strong indication that we could see some buying pressure start entering and see some sort of trade as for like a swing trade or some sort of short-term investment or trade. You could hop in at Tesla at about 234, set your stop loss at 225, so you're risking, let's just say, about $10 to possibly have this go back up to 275. So you're risking about $10 to make $40, which is about a 4-to-1 risk and reward, which is pretty strong. Now, to answer that question of am I buying Tesla? Well, I'm a huge Tesla bull. I'm sure you guys know, if you guys follow the channel, I buy Tesla quite often, and every time this thing has sold off down to its lows, or sold off pretty much more than about 5 to 6%, I put some money into it. I think that's a very strong approach for like a long-term investment, and that's where I see a lot of value out of Tesla. I understand that Tesla is growth, it's a growth stock, it's volatile, but it's also heavily invested into technology, software, artificial intelligence, and just those sectors alone are expected to grow at about 37% annually for the next 10 years. So if Tesla can make some money off that, and we see a lot more buying pressure enter, I think Tesla's in a very, very strong place, and they're one of the leaders of the electric auto space. So with that being said, I think, yes, putting some money into Tesla, I'm doing it. I've been doing it, but it's also a growth play. And what I mean by that is I'm not dumping, 100% of my portfolio into Tesla. I'm keeping it under about 5%. What that means is for every $100 I have invested into other ETFs, assets, stocks, I'm putting about $5 into Tesla. The reason why that is because if Tesla does sell off down to zero, I'm only out 5%. But if this thing does squeeze back up to 414, I have a decent amount of shares where I can make some good money off this. I think that's a really strong approach when it comes with investing into Tesla, is to have that where you understand there's risk behind it, but you kind of still have shares and you adjust your portfolio accordingly. Another good strategy is to dollar cost average. Like I mentioned, I love to buy when Tesla sells off. And a good approach, like I was saying, is dollar cost averaging. So what you do is you're investing consistently into it. Now, as Tesla sells off, like we've seen, what you're doing is you're just averaging down this price. So once Tesla recovers, your average cost is a lot lower, so you make a lot more money. It's a great way to invest into growth stocks for the long run and a little more volatile companies, because you're buying those dips as it sells off, and once it recovers, your average cost drops, so you make a lot more money. It's a really, really good approach, but you still have to understand there's an incredible amount of risk, just because Tesla is a growth stock. It's not like a value company like Coca-Cola. This thing is going to be volatile, but it's going to make you guys some money. But overall, guys, this is all my opinion, so do your own research before you guys invest. But we'll see you guys later. I hope you guys enjoyed it. Hit that like button and subscribe, and we'll see you guys in the next one. And don't forget to check out my swing trading course, link down below. Take care.